What's going on, everyone? Good morning. Great morning. Happy to see you all on this Thursday as we get ready over here for our Conquering Trading and Investing live session. It's Thursday. I hope you're all well and doing great. Mic check, mic check. Wanted to make sure we had the mic on. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. Today, we're going to take a bit of a humble approach. We are going to make sure that we get our bearings. There's a lot going on in the markets. Yesterday, Powell, he came out and he was quite adamant that there is more pain ahead. I can't even count how many times he used the word pain during that press conference. I think he was serious. I think that we need to I think we just need to have that little bit of all being Rico Funk, thirsty for alpha on this Thursday. And at the same time, during these unprecedented times, take it easy, take it slow, and make sure that we see it with clarity. We're going to open up and talk about what's going on over here with the Bank of Japan as they are intervening in the FX market. It is what is causing the DXY, the dollar index, to come off this morning. And of course, yesterday, off of the back of the Federal Reserve's rate hike and forward guidance, the Bank of Japan had little room but to intervene in the markets. And we could see that this morning so far, the effect is that it is having a weakening effect on the dollar. It does seem to be reverberating across markets as we are also looking at risk markets trading up. Let me jump over to off of FX for 1 second, which we will come back to. And we could see that crypto is responding favorably with Bitcoin up 3.65%, Ethereum up 4%. And the equity markets are very all over the place. NASDAQ now back off almost a 0.5%. S&P off 0.2%. They had just turned green over the last 20 minutes or so. So you could see that the markets right now, there is a lot of uncertainty about what happens next. And because of that, we want to take it slow. We want to get our bearings and then make sure that we're able to, if the opportunity presents itself, attack. And this might be one of those situations where something nice is setting up. And I'm talking about on the US dollar, Japanese yen. Now, what's happening here is the Bank of Japan is intervening in the market to defend the Japanese yen, which means that they are selling dollars. Now, do you think that the Bank of Japan is going to unilaterally be able to put a stop into the dollar wrecking ball? I mean, I say that with most likely that they're not going to be. If history is any indication of a central bank acting alone, including the Bank of Japan, which has intervened in the FX markets before, it will be something that is not long lasting. Now, test. Yeah, I think we might have us back online. I'm seeing finally the voice move. Could someone let me know whether or not they could hear me? I'm not sure if it needs to be coming through the Yeti or the Ecamm Live software. Test 1 2 1 2. ID. Yeti. Someone could write Yeti. If you hear me talking right now, write Yeti. And if you hear me on the Ecamm, could someone write Ecamm? Or if you hear me on both, could someone put both? I just need we're all good to continue. It's good. Is it good now on both or which one? Let me see. Yeti. Thanks, Mark. Thanks, Matt. Boom. Yeti it is. And a quick save and a butte. Oh, all right. There we go. Back online with you all. We were getting into it. We started grooving on this Thursday morning here and just trying to figure out where we were before we ran into that trouble. I'm sitting here talking with you, like setting the tone, setting the stage for what's happening. We were talking about China, and as I'm setting the stage, I was fiddling with the mic and I caused some outage problems. That was my fault. I apologize, but nevertheless, let's keep going. Let's get going over here. China, obviously, they are being punished over there. We're seeing lots of countries selling their U.S. treasuries, and part of the reason may be that they actually need dollars. The strong dollar is doing its thing. It is being a wrecking ball, and it's not just Japan who it's affecting. It's affecting many countries. Amongst them is China, and China is voicing solidarity that maybe Japan doesn't need to act alone. So if Japan is acting alone, this move will probably be short-lived. And short-lived, maybe about a week or so. And then we'd be looking or potentially looking at the US dollar, Japanese yen reversing. I believe we looked at this last week when John pointed out the test of the intervention taking place live during the live stream. And they were doing their mic check, making sure that they were ready, letting the market know ahead of time what they were getting ready to do. We saw that for 2 days in a row for 48 hours. There were no JGBs traded over the last 2 days. I wonder if they knew something was about to occur over there in their homeland. And then what we're looking at, though, right now is some investment banks, we said that day, they were talking about intervention could potentially take this cross towards 137. But if it's unsuccessful and this starts rolling over after the Bank of Japan has shot its bazooka, there's not much they're going to be able to do. And we might see, indeed, the DXY headed towards 120 and the US dollar Japanese yen cross headed towards, above 150 on its way towards 175 and 200 and all that's possible. And right now, why people are looking, the Bank of Japan is intervening, I want to go ahead and participate in that trade. You got to be very cautious. Unless we saw some reason yields in the U.S. start to come off, and they're not. The opposite is happening this morning as you see that yields are actually screaming upwards now as the U.S. raises 75 basis point hike. And Powell's forward guidance was pain. There's more pain ahead. And they look to be continued tighten, and the markets look like they can handle it right now. People continue to look for things break, but they're not breaking. Or if the dollar were to come off substantially, that would help the Bank of Japan over here. Or if actually this wasn't unilateral intervention and that other central banks actually, Plaza Accord 2.0 type thing, if that happened at that point in time, that would be a macro trend change. But that's not happening right now. So instead of looking for like deep continuation on this trade, I think it's going to behoove us to be very patient and watch how successful they are over the next coming week and see if the opportunity arrives for some type of failure, which is what history suggests, that they'll only be so successful in the near term. And then we might be looking to set up a potential big trade to the other side. With the one caveat is, when you're dealing with central banks and intervention, wild things could happen in the FX markets. And, I know that risk management is always, always, always paramount. If you want to survive, if you want to be here for 20 years, if you want to thrive, you have to learn, above all, to manage your risk. And we would have to be very careful in getting into any trade like that if indeed all of a sudden that trade started becoming a cannon in the other direction, that other central banks, and including the Federal Reserve, decided they wanted to have some type of intervention, joint intervention, Plaza Accord 2.0. Now, the one thing is, yesterday in the press conference, Powell said, when asked in the question and answer, it was asked whether or not Hunter, Bitcoin is still going to infinity. Yeah, so Hunter, I don't know if you had the opportunity to watch that amazing video we did last week, and it talked about that the thesis, the base case for Bitcoin is that it is a hedge against the debasement of the dollar, and why other people out there have tried to show you Bitcoin's relation to M2, which in the video we explain why that really doesn't make any sense. That if you compare Bitcoin to the monetary base total, it's probably the single biggest signal you will find in the markets. Now, right now, obviously, Hunter, as you know, anyone who's able to deploy any type of clown emoji, they got skills, right? So anyone who's able to really use the clown emoji to emphasize their well thought out, ideas of the markets, they got game. And Hunter, right now that the monetary base is not being expanded, it's contracting, right? As we're looking at rate hikes rising and Powell looking to put the brakes on the economy and quantitative tightening getting ready to pick up over here. So as far as Bitcoin going to infinity, the dollar's eventually going to zero along with all fiat, right? So if Bitcoin is still here, it will obviously be going to infinity. But you know all of that, so I don't need to tell you. So anyway, back to our program. We want to stay calm today. We want to take it slow, and we want to be humble, right? There's a lot of uncertainty kicking around the markets here today, even coming from countries and central banks. And believe you me, that they don't know. The next crisis, unfortunately, could be a sovereign. Bank of Japan is, you're talking G7 nation. The contagion risk here would be absolutely horrific. The thing is, you know what? You might as well get some in case it catches on under this type of, when things go bad, you might not be able to get yourself some Bitcoin. A lot of people looking for 3K Bitcoin, you remember what happened in the nickel market recently? It was only several weeks ago where basically nickel exploded to the upside. When markets break, watch out. Yeah, I don't know if it's going to be, usually when something breaks in the market, usually no one knows ahead of time what it was. That wasn't the case with Lehman. I had friends in the banking sector letting me know weeks ahead of time about what was happening with Lehman and that it was going to go under. I'm trying to think what else when we know ahead of time what was going to happen. The repo market breaking in the last crisis, that was a complete surprise. No one that I know of, I'm not sure if Zoltan did or not. I don't think he did. But no one really knew ahead of time that the repo market was going to break. And I think a lot of people right now are looking towards potentially, obviously, as they are, you don't want to bet against the central bank either. They basically have unlimited yen they could print to defend their yield curve. I wouldn't want to go against them. We've seen some successful traders, some legends, Stanley Druckenmiller, George Soros, acting in unison, being able to go against central banks. And there are lots of hedge funds right now that are actually, let's say, looking to mimic that type of behavior and are betting against the Bank of Japan over here. And right now, today, they're probably having a bad day. Right now, it's a question about how long the Bank of Japan will be successful here. And they're not going to be successful if they continue to act alone. I think right now, instead of trying to be like, oh, the Bank of Japan is entering the market and they're intervening, and I want to jump in and try to ride the tails of that, we should just step back and look to see if we're able to see this intervention fail. And if it does, that could be setting up a really big move. So we'll wait and we'll watch. What else? Let's check out what's going on across the markets as we came in over here. Equity markets are looking horrific right now, right? Let's take a look off of yesterday's Fed communication. Not only rate hike, but then look what happened over here. This is kind of neat. So we're on the 8 hour, and I'm going to jump down to a smaller time frame. only so you could see that the little, we had a support over here and then support over here in this whole range, right? And we saw that price came all the way down, held our support, and then over the last few hours, ever since is the stream blurry? You see, I think in the bottom right, I had problems reconnecting this morning to the stream. In the bottom right, if you click on the gear icon, you could change it to like just a lower setting, and then it should be a little bit better for you. But that was my fault over here this morning, as we had some technical issues. And notice how that what happened, that after finding support, that price came all the way up into the resistance, right? And is now being faded strong. As New York comes to the desk, they are looking to go the other way, and there's lots of selling going on. We are very close. Obviously, we have that little bit of support where price was able to find and bounce off of, dead cat bounce, and it now seems to be headed back down, looking to resume. And below 11,500, we are looking at another test and taking out potentially the June low. Now, whether or not that happens, or whether or not, because of the weaker dollar, the dollar you could see is actually, which was off, when I saw it, the most it was off was about 0.75, is now only off 0.22%. And, I can't imagine that the intervention will be that short lasting. I think what we're seeing is a lot of, I don't want to say noise. None of it's noise. A lot of it is just like crazy price fluctuations. You don't want to be in the market right now, right? You don't want to be getting faked out to the upside, to the downside, and all around. And that's why I said this morning that we were actually going to take a very humble approach and kind of just try to get our bearings across the markets, because the markets right now are a little bit, they're not disorderly in such that they're running, one way aggressively, but they are extremely choppy. It's not a good place to be participating right now. Business is slow, Bitcoin is down, and the economy is bad, and Powell's insistent that he wants to make it way, way, way worse. And I don't know what is going to happen, and I think I will continue with that type of posture. We're looking at it already coming up at the November meeting. The market right now is pricing in a 65% chance of a 75 basis point rate hike. Now that's going to change, right? We have quite a while until the next meeting. So I imagine that, specifically and especially next month's CPI should be something that will change these expectations, as well as jobs numbers. But we'll see. One thing that the market and the Fed are definitely holding different opinions about is going to be for how long they're going to be able to keep rates once they get to their neutral rate, to keep them at that elevated level. And the Fed is suggesting that they're going to do that for an extended period of time. And the market right now is saying, no, actually, all of this tightening is going to cause a recession. And that is going to cause, you have to come in and cut rates sooner. And I don't know, do we take the Fed at their word or not? Like, do you fight the Fed? What does fight the Fed mean? Does fight the Fed mean that you watch what they're doing and not what they say? Or does fight the Fed mean that if they tell you something and you don't believe them, you're fighting the Fed? I think it's a really tough one. And fight the Fed has in the past meant like the Fed put is there, and the Fed is very clear about the Fed put, and don't fight the Fed, and that worked out for a good 12 years. I think that has changed right now, where the Fed put, no one really understands and know what it is, except those that pay attention to the credit markets, and Luke does a fantastic job. Luke, aka Luke Costas on Twitter, does a fantastic job of showing us And by the way, that's something I'll be looking forward to later today to see since yesterday what type of price action we're seeing on high yield. But that's something that the Fed is paying attention to. And right now, I think that asset prices coming off and the economy slowing down, that's well welcomed because it at least gives them the perception that they're in control, right? And we know that the Fed's ability to rein in, to control this inflation is kind of limited. I mean, they could cause a depression. Maybe they are trying to cause a depression. We got into briefly over on the Twitter talking about, let me go ahead and see if I could pull it up over here. I wanted to go over this thread with you today. I never got the chance to read it, so I think maybe that we're going to do tomorrow. Maybe. Did you all like going over Caleb's thread yesterday? I enjoyed going over that with you. If we like that, we could go over Alf's thread tomorrow. So the Fed's rate hikes will accomplish one thing in the end, and that's a recession. Many people think we're already in one, and maybe Powell is aiming for a depression and orchestrated crisis for everyone to willingly accept the CBDC and the digital dollar. 2023, fun times ahead. There are some people who think by the end of this year that we will be looking at the introduction of the digital dollar. I don't believe that. I think that Fed Now is scheduled for 2023, the beta program to go live. And I don't think that will be I think that's just setting out the structure for the eventual digital dollar. Nevertheless, I mean, this is not something new. This is not a conspiracy theory. When the Fed acted in March, late March 2020, here on the channel, this is what people was like, when's the next crisis? It was very clear that, this was the crisis. And not only was it the crisis, we were able to really be ahead of it. We nailed the whole thing on the whole way down, right? Eric Townsend from Macro Voices, the only other person I know in the markets who was there. No, everyone, it seems so clear all the time with telling you what's happening right now that it makes their analysis seem spot on. But very, very few were able to do it in real time. And then getting the turnout, right? We flipped very quickly. And that required, by the way, not just one position getting the turn, lots of small losses at the bottom into finally catching the turn. And it became very quickly, this is uber asset inflationary, and very quickly to almost tongue in cheek, because any decision you make is your own, but forbidding people to sell. And it was the other side on the way down. It was you cannot be looking to take profits in a swing trader's mentality. These are position trades, really push them. They're going to go way further than you imagined. And during that time, people were looking for the crash to retake out the lows again. And this was the general, across the whole finance sector. Insolvency events coming. It's the next phase of these crises. This is how it works. And we were talking about, the next crisis probably won't be until they're able to introduce the digital dollar. We know that's their plan. The IMF in 2019, 2018 released the white paper on the central bank digital currency. We read it. I read it. And they were very clear about what they want to do and how they want to back it by the SDR. And we've seen over this last 12 months, the U.S. government, they put $150 billion towards the SDRs. And what they're doing is basically the U.S. dollar debt-based system is unsustainable. They need to start a new system. They need to start a new Ponzi scheme. And they want to, as they were in control of this one, the powers that want to be control of the next one. By the way, as it is right now, I kind of believe, or my instinct tells me that when we get to that crisis where the current system is put to an end, it's going to be the Federal Reserve that is sacrificed at the altar, just like Lehman was. And it's going to be the Federal Reserve and the United States, who was blamed for everything. And then we're going to have, the IMF, the SDR, which is a quote unquote basket of fiat currencies, including the Japanese yuan, including gold, right? And whether or not that winds up actually being a basket of commodities, we'll see. Anyway, I don't know why we're talking about all this stuff, but we are. And it's what scares me. What scares me is when something that's going to happen and it's really not a good thing, Unfortunately, there are many things that we know are going to happen, right? And either which way, we have to talk about them. I know a lot of people do. It's probably not good for any likes. It's probably not good for people out there who don't want to talk about people conspiring for power, right? Because it's a conspiracy theory. Yeah, people all over the world are conspiring all the time for power and control. It's what they do. Yeah, so this is a tough conversation. I'm not happy to be having it. I didn't plan on having it with you, but it's something that, we have to be prepared for. And by the way, PS, it's probably the time whenever the digital dollar is released that the government, if it comes against Bitcoin. Now, that's not a certainty that that's going to happen because, the U.S. has a few things going for it. And one of them is like the separation of the executive branches. And we have lawmakers who are able to pass laws. And you could see something like people that are favorable towards Bitcoin over the next 12 months, potentially able to pass legislation that would protect Bitcoin from any type of, let's say, attack. But I don't know. These people are powerful. I don't know what's going to happen. So, and that's the best way. And that's how I started this off. Look, I think today we're just going to go with the whole idea that we don't really know what's going on. I didn't see if anyone liked or talking about Caleb's thread yesterday. I really, really did. Solid Pepper. What's up, my brother? Great to see you here this morning. But look, I think we need to go over it anyway tomorrow. It's a little bit thick. We were thick yesterday, so we're not going to do it today. Let's keep going. We have the Bank of Japan right over here. We got the Swiss central bank came in a little bit lower than I expected. I mean, they came in on forecast, but I was expecting them to come in a little bit more powerful personally. I mean, I didn't let you all know that, but that's what I was thinking. So that's interesting, seeing little bit of softness over from the Swiss National Bank. If you could say a half basis point rate hike is soft. And then tomorrow we have a bunch of manufacturing and PMI data, services and manufacturing coming out of Europe. But more importantly, Powell is speaking again, right? And we talked about earlier in the week when we looked at the calendar on Monday that they had over here Powell scheduled at the end of the week, just in case he needed to clean anything up. But I'm pretty sure that he likes what's happening right now. I'm pretty sure that he likes, the equity markets coming off. And I'm also, I'm pretty certain that if the Bank of Japan intervened in the market, the only way they could do that was with the go-ahead from the U.S. And I'm sure Janet Yellen was not only aware of that. This stuff is all coordinated, and they needed permission. So, what else? I mean, we're still holding. Yesterday, we were holding positions going in to the FOMC that were in profit. And my expectations were, and I told you that, look, if things like go sharply to the upside, that I'll wind up, closing this out as a loss and taking a loss. And I'm fine with that. And you could see on this bar over here that I was spiking up. Price was getting ready or setting up an exit, but that exit wasn't for let's call it 5 hours away. And if price kept rising, by the way, because this probably up here was only about 2% into profit, if this trade would have exited at a loss, right? I was perfectly good with that, rather than trying to, discretionally trade at a whim. It's a lot easier following a mechanical system. The system is able to continue to hold steady. What I like about it now, as these trades, and both of them are now falling well into profit, that if the momentum continues to the downside, and by the way, there's no good feeling, at least for myself, about like as Ethereum comes off 15%, or being in a trade that's 50% into profit, like feeling good about it. Like to me, it doesn't feel good when crypto goes down, but it does feel good to have the clarity to know what side of the market to be on and when, and profit off of it. Because why it doesn't feel good to see crypto go down, it feels bad if you're holding a position and you're just a forced hodler and you're holding it as it comes off. I'm here to make money in the markets, and I'm here to provide a better future for my family and then the generation behind them. So I just let you know, I'm not happy when the markets come off, and we've seen some massive moves this year, right? The one in like, this is a bad move. It never feels good. It feels good to be on the right side and to be stacking stats regardless of what's happening, but it doesn't feel good. What I like about what the situation now is, because we've seen off of the FOMC and those wild moves, if at any point we have a momentum change and an exit, when we have the next exit from this trade, most likely it's not going to be giving up the amount of profit it would have given off of that high risk news event with the FOMC. So that feels a little bit better, because at the end of the day, we're here to book profit and make profit. It's about to get a lot worse, in my opinion. They had no way to clean up the mess they created. I mean, so I don't mean to get back into like they created the problem to be the solution, but yet we have to wonder if the reason they told us inflation was was transitory. Don't fight the Fed. The Fed's saying that inflation's transitory. Do not fight them. How would that have worked out? So we can't be choosers believers, right? Like, what does fight the Fed mean? And maybe that means a lot of things to a lot of people. I don't really know. But the Fed has a long history of what you would say getting it wrong in real time. So what does fight the Fed mean? I mean, fight the Fed universally has always meant that the Fed put is out there. If the market's tanked, the Fed's going to be there to go ahead and reinflate the system. And I imagine that still stands. Another thing that keeps me up at night is what happens if they let it crash into a deflationary spiral. That would be horrific, and I can't imagine that they would do that. Now, I don't think, and we've all known this for quite a while, they're not concerned about the price of the indexes. They're concerned about the price of the credit markets, or the situation of the credit markets. And the Fed put still stands, only that there's still at this moment, a massive amount of liquidity out there. And that's why things haven't broke, even though many people thought they would have had by now. And, the Fed believes that the markets could withstand this tightening. Jerome Powell did say the longer the tightening goes on, the less of a chance for a soft landing. So there's another, Jerome told us that there would be a soft landing. Don't fight the Fed. What is it all? I don't have the truth. That's the whole thing. And the longer I'm around in the markets and the more successful I am, it's coming from realizing that the best posture you can take is kind of always questioning all sides, especially when you have a firm belief in one. And then, by the way, you could also see the other market participants, how they react at certain times, and those become big tells. It's like you're sitting at the poker player and you're able to read everyone and read everyone really well. And that comes with experience, and that's why we put this work in today. So Andrew, this would be so tough. This would be like, if you ask me, the 2022, the last 9 months, which has just been this let me just clean up this chart a little bit, right? We just need this. Is the 3-day too far? I think the daily would be sufficient. And we're just looking at this train wreck to the downside. And if that continues, Andrew, and if that continues for another 6 months, if that continues for another 12 months or 18 months, 2 years of a bear market, I imagine, who could time these things? All you could do is look at past behavior. And there are so many different examples of past in the past of markets doing different things at different times that you could, I compare this to this period and that, but whatever, right? This time is this time and it is always different, right? And, I was going to make a line over here. So I was going to do it over here. So I don't mean to mess up my chart and make it noisy, but I feel like that's important over there. You could see this broadening descending wedge. Or I see a broadening descending wedge. And I'm not familiar with it. I know that would be a topping pattern if it was happening the other way. So is that a big bottoming pattern that's developing? And of course, if it's going to test the end, the bottom side of this, right? That's massively lower than where we are now. I can't even jar it in. But that I can make the case for what looks to be a broadening descending wedge. I'll Google that later. I don't know how that plays out as a reversal pattern on the downside. On the reverse, a broadening wedge would be a reversal pattern on the upside. Yeah. So look, just prepare yourself, right? Dollar cost average strategy is a long-term strategy. So forget what happens over the next year or two. And by the way, a lot of people probably right now embracing the 4-year cycle, and they're, the halving's coming up in March, April 2024. And I know that, generally 6 months after the halving, prices, going back towards those new all-time highs, and then we're getting ready to ride. And people that, if that were to happen, people right now that continue to dollar cost average, and this is just a massive opportunity. I know it never seems like it during the bear market, but coming out of it, your overall average cost is going to really be looking good and feeling good coming out of it. But there's no certainty that that's what happens this time. The market dynamics have definitely changed. The market has matured where the market cap and the players are much bigger. By the way, there are many positive things going on. We talked about them yesterday. We talked about the NASDAQ offering custodial solutions. And you could imagine the institutions that already deal with the NASDAQ, right? We already have the ICE, the parent exchange of the New York Stock Exchange, offering custodial solutions. I mean, Wall Street's here and they're not here to take down the price, right? They make more money as the price goes up as well. But what they are doing is they're late to the party, and no doubt that they are very, very long-term minded. And I'm sure that I'm sure that the network effects, the growth of Bitcoin, which is the second most important factor, right? Monetary debasement hedge. And it's a Ponzi scheme at the end of the day. And although they are right now contracting it, they are only going to contract it for so long. When they contract it, it does cause recession. When it causes recession, it causes the economy to grind down. And when and if something breaks, and something will break eventually, I imagine it's going to be or take a lot longer than people expected. I mean, we're in September. People expected 4-5 months ago for things already to have broken. It could go easily another 4 or 5 months or another 18 months before something breaks. I have no idea what something breaks looks like. But there's also the thought out there that what we might see, and it could very well be happening, is a lot sooner, is that first of all, did you see Powell? He was very clear that they're not going to be selling any more mortgage-backed securities. I mean, they can't. Who could they sell them to, right? So all those they could do really for quantitative tightening is they could allow these assets to mature and then not roll them over. So that's on like a time schedule. There's nothing they could do to kind of speed up that process. That's happening. That's underway. But as this energy crisis continues to not only loom, but be in full bloom, and winter's coming not only across Europe, winter's coming into the U.S. It's expected to be a cold one. What are they talking about? El Nino, like 3 El Ninos in 1 year or something like that? I don't know. But it's going to expect it to be a cold one. And governments, as the U.S. depletes their strategic reserves and then begins refilling them. And we've saw that it's only energy that has helped headline CPI come off. It's possible that the Fed, central banks, or governments, and if governments are handing out stimulus, the treasury is going to the Federal Reserve and they're the ones running the printers, that we could see a return to balance sheet expansion with inflation running over 10%. I mean, that's going to be a nightmare, but it could very well happen. So listen, it could be a long time and a painful time and a grueling time until we see any type of things break and return to massive balance sheet expansion. And I imagine it's going to happen again, and probably a couple times, if not a few times in the next 10 years, as we get towards this 2030, the Great Reset, which is monetary reset. At the end of these things, the moves on both sides get violent. And we're seeing that happening in real time right now, and it's going to continue to get worse. Cash is tough. Cash is tough because you're losing roughly 20% of your buying power a year. I mean, if you go with the official rate, it's closer to 9%, but I don't see inflation at 9% a year. I mean, maybe it is, and maybe it's coming down. Maybe it'll level out somewhere between 4 or 5 or 6%. And I mean, do you grocery shop? Do you I do. Inflation is not 9%. There's no way. But even when, and if you remember, before we've had this latest this balance sheet expansion, they were trying to tell us that we were in this like deflationary environment for the last 20 years. And I don't know about you, but I was able to see lots of things happen over this 20 years. First of all, the price of everything continued to rise. And if you bought a box of cereal 15 years ago, you got a lot more cereal for less money, right? And then that 10 years later, the box is smaller. There's less cereal in it, and it costs the same price or more. There was like stealth inflation happening, and maybe you weren't aware of it because you didn't have the perspective. Time is something that is a really important factor in everything that we do. Experience is really the teacher. It helps to have a mentor. It helps to have someone who's been through it. It helps to have community. But really, I think that most of all, it helps to really just continually to work on yourself. And it's difficult, especially for all the men here in the group, and especially for all the young men in the group. As a young man, you feel invincible. You feel like you know it all. You feel like the ones before you don't know what they're doing. They made lots of mistakes, which is why the world is how it is right now. But that's because you're young. You have a lot of lessons yet to learn. And what I really admire most is when you find someone who is so young, yet so wise for their years. And you admire them so much because they have so much time ahead of them. They could build and do so many great things. But those people are usually a lot more open to learning. And I hope my children, I could mold my boys to be like that. It's a fine line. Rising wedge against the dollar. Ooh. So I saw, sort of rising wedge on the dollar. I mean, good luck. The way that I do these things is like, instead of putting out Is this what we're looking at? That looks like more of a rising wedge. This looks like it's having a little bit of a diminishing effect over here. That looks like a good look though. Do you see that? So you could see the symmetry that's happening over here. So I'm going to clone this line up. Yeah, that's a good look at the channel that's taking place right now. All right. But what's important over here is the breakdown, right? And by the way, I think we could at this point set up a new one of these. Let me move this over and readjust it. Yeah. Good luck, Croatian. There's a massive one for great. There's first of all a massive amount of money in cash on the sidelines. So I also see in the markets that participants continue to get smarter and smarter. That's why all of the actions of the Fed are actually front run quicker and quicker. It makes it very difficult for the Fed, right? It really does. But another thing that I see is that, we see the options markets, like people are hedged to the hilt. And so where does that new selling come in? I don't know. It's all complicated. It is very complicated, especially right now. My pasture rigs. Yeah. So Kyle, that's a good point. I not only over the last week, over the past, let's call it 4 weeks, past month or so, I've seen in the grocery store though, lots of things on sales on lots of items that are useful and needed and used all the time. And so let's be realistic, whereas 18, whatever they call these things these days, pasteurized, organic, blah, 18 eggs, $11 is now $9, right? So there things are leveling out, and that's in food. That's a really good point. It's a really important point though, Kyle. And it might have been said in jest, coming off 50% after rising over 50% in the past year. But they are, for sure. Yeah, Cardano is embraced by CTM. I don't have it up over here. I only got the Bitcoin micro futures. No, I don't even have over there. It's on a different template. Yeah, not by myself. I have yet to include into my portfolio allocation Cardano. Now, there is a strong segment of CTM that trades Cardano. So instead of having Bitcoin and Ethereum, they have Bitcoin, Ethereum, and Cardano, and we have outstanding strategy for Cardano. But I remain with Bitcoin and Ethereum. But I've for a long time now have really been sitting with it to see if it's something that I feel like would be a benefit to my overall portfolio allocation. As there's a lot of alpha to be made on it, except that it's hard to come up with something better than Ethereum for trading, sincerely. And the stop losses need to be a lot wider on Cardano than they are on Ethereum. They're really tight on Ethereum, using a 2.2% stop loss. It's very tight. It's very easy to manage risk, and the gains are explosive. So, but I sit with it, and then we also think about what's going to happen next cycle, right? And it's hard to find out ahead of time which are going to be the quote unquote new flavor of the day, the coins that are going to run. There's massive opportunity in the altcoin market. The thing is that it's like penny stocks. It's so wide and it's so varied that after something explodes, it's able to oh look, that thing is, or Ethereum, man, this thing only put in 100% gain and only took 52% profit. But Ethereum Classic did twice that. Yeah, I mean, but how did you know, or why did you know to focus in on Ethereum Classic at that particular point in time? And then other altcoins, whether it's like XRP or Doge, they're 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 very like spiky in the way they move, and they're not like, I go with what's easy, and I say that in jest, but I go with what's easy. Yeah, for me it is, but a lot of people are having a massive success on Cardano. Yeah, Juan, and that's, yeah. I mean, I love it too. I don't know if you, I think without explaining it, you all see that we did over here. I was trying to look for, let's say a rising wedge pattern over here on the upside, and then instead I was able to kind of more focus in on what the market structure is, and this channel seems pretty clear over here. By the way, that suggests to me is that probably what is needed over here, and it's not going to look pretty on the chart, so maybe I'll change it in 1 second, but is going to be a one touch line off of here, right? Because of the symmetry of this channel in the market, that I imagine that even a break of this line over here, right, is going to come into resistance over here. But I'm not going to, and I don't, like, people look at that and they probably don't understand how I got there. And a lot of times if I post this chart on Twitter, people would not understand it. And that's why I use video anyway, and this format over here to teach and to share, is because it's a lot harder to post a chart on Twitter to get people to understand just from looking at that chart, and why you could do that and you could gain massive interaction. All I need to do is draw a chart and then draw like a big arrow going this way or a big arrow going that way, and then people will like it and retweet it and love it. But I'm not here for that. I'm not here for interaction. I'm here for people that want to actually discuss things, especially things that are contrary to my own opinion. I want to learn, so I want to discuss those things. And then people who are able to add to the conversation, and regardless of the amount of interaction, I'm more concerned with the value of that interaction. And that's why. So much, yeah, I mean, precious metals in this environment, silver is continuing here, first of all, to consolidate after the Fed, and we've seen like the breakout that was too aggressive for us. This is where we look to take it. This has stopped out at break even, and then since then we saw that support hold. We saw a move break above this trend line, a retest, and prices here. This area over here would be a resumption of the trend, right? And not only that, it would then be targeting. We got some nice resistance overhead right around, between, let's call it $20.80 and almost 21. And that's a decent move. That might be the next place to set it up. But as I'm looking at that, like, the market is going sideways here, and I feel like the posture right now is wait and see. Wait for further clarity. I don't see too much clarity right now, right? If your clarity right now is, well, stocks are getting obliterated, I think that the one major wild card over the last 24 hours was not the Fed. That was as expected, but we're seeing the intervention take place. We don't know what the consequences on the dollar are going to be, whether they are like able to be successful for a week or so, which has been about their average in the past. And if that's the case, we might see the dollar over the next week be under pressure. And if that's happening, that might give this false sense of security that risk is rallying. You can see crypto up today, right? And is that because the dollar is off a little bit? Or is that because Bitcoin and the crypto market are sensing here that, well, that's all being priced in, and actually the June low is going to hold, and then we're gonna rally over here, and you'll see the equity markets put in that same behavior, right? Is this nothing more than like a bit of a head fake? Or is this just coming off of the dollar's weakness today? And if the Bank of Japan had not intervened today, as we do see 10 years exploding to the upside, would the DXY also be exploding to the upside? And then would crypto be under much more pressure? I don't have the answer to that. I mean, it's what the observation I'm making is, well, it's a little sketchy out there. And or maybe it's instead of having to be out there forcing things, I know that all my alpha is coming in from just trading what's happening, right? I mean, without thinking about it, without having to worry about it. I mean, I'm trying to zoom in over there. I can't do it. Anyway, so maybe because of working so hard for so long and putting the tools into place, that, I mean, there's nothing more efficient, right? Like CTM, we talk about it. There's no one there that could out trade CTM 2.0. So, I mean, look, there's a lot to be learned from TA, I like to call it CTM 1.0 style, and the way that we're able to look at markets, and I'm doing that, but I'm also doing that right now with right now I feel like this is like, we got to give it a little bit of time over here, and look what the markets are doing, right? Here's what oil is doing. What? Nothing right now. Do you really feel that on this Thursday that you should be taking a position here? Worse onto Friday. I don't. So I'm buying time the way that I'm going over things with you all today. The DXY, do you think that I should take a position here? I don't know. It looks like no man's land. When I say that, we have overhead resistance right above us. And then we just set up today this look at that trend line break for a downside. But that's in no man's land here. All right. What else is there? The Nat. I mean, there's a lot of volatility over here. This could be breaking down a little bit further, but no. I mean, why I say no is just my hesitation. For those out of here are day trading, right? Like sold with the dollar sign. And if you were I don't know, on a 30-minute time frame, and you saw the move into resistance, the bounce off support, and then if you were lining up a trade coming out of that, I could see that, but that's not my style. I'm not on such a short time frame. I don't see another trade beyond that. Gold is doing a lot like oil, and it's just kind of consolidating right now. We're not going counter trend on the upside. We have this line, like the water's not safe to get into it. It's because it's so weak right now until you saw a break above that, and fundamentally it's not attractive at all. And I could see this is consolidating here, and that looks like a continuation pattern, just like this one was. That's setting up, a bear flag to the downside, but it's not in play right now. There's a lot of indecision going on around, and kind of, this also is just consolidating over here. This has more of a bullish twist to it that's happening right now, but there's not much. There's nothing to be involved in that I see right now, and I think because I know that, instead of being like a shark and looking to attack, I'm more of kind of conserving energy, and I'm conserving energy, waiting till it's time to attack. So it's not today, and that's one of the mistakes you do make as a young kid, is you're just always looking for the action, but that's not how a seasoned veteran does it, and that's why we're doing what we do. So I'm just trying to talk it through with y'all. No. It's a great question. I'm a believer of 10 good years followed by 10 bad years, and I guess most of all, I'm a believer in that the dollar-based debt system is a Ponzi scheme. We are getting towards the last grasps of it. And it is why we see things like the World Economic Forum talking about the Great Reset. It is why we see the de-dollarization that has occurred by Russia. It is why we see the U.S. confiscating the Central Bank of Russia's reserves. It's why we see China building out not only the digital yuan, but also aligning closely with other nations, Saudi Arabia, aligning with Brazil, Argentina, India, Russia, and they're trying to form some type of alliance in the world. It's because monetary reset is happening because everyone knows that the current system is unsustainable. When I say everyone, I don't mean everyone. I mean, if I ask my friend Joe, he doesn't really know that monetary reset is happening. He might now have a little bit of an uneasy feeling about the inflation that he's seeing. He knows that's real. He doesn't like it. He doesn't know why it happened. But and he could probably justify, oh, well, we just came off global lockdowns. Yeah, why were we locked down globally? Right? At that point in time, the system was broken. We know that ahead of time. We were talking about it before we went to global lockdowns, and that injection was needed to keep the system going. There's going to be more, and my thesis is not so much about 10 years and 10 years or anything like that. It's like that we're going to see over these next, let's call it, what year are we in? 2022, halfway through. So we're about 2030 for a reason, by the way. Call it over the next 7-8 years. We're going to see, like we saw in the past 2.5 years, with a massive injection of QE, balance sheet expansion, we're going to see diminishing returns. Meaning, the first one that occurred, the first massive balance sheet expansion, that was $850 billion, and it was 14 years ago. And that lasted for 12 years. And then the next expansion was 5 times greater, not even 5 times greater. It was 8 times greater because for the next 2 years, they kept expanding the balance sheet by $1.4 trillion. So it took 12 years until they had to do it again. And then they did it much, much bigger. So I imagine that the next time they have to expand the balance sheet is going to be much quicker than 12 years. And it's going to have to be much bigger. And the effects of it, why this one you could say it lasted 2 years, are going to be much quicker. And these are the last dying grasps of the system. That's my belief. Now, how could that be wrong? Where could that be wrong? Well, there's 2 ways, right? So the first way is that, well, what happens if Fed tightens over here and they're able to keep these rates elevated and for a long time? Well, first, that's just mathematically impossible. They can't do it. There's a really good, well, not really good, but there's a podcast that you should listen to, a discussion that took place on the Investors Podcast with Preston Fish this past Wednesday. And what it was talking about is, as we've been talking about, the conversation is going to become the debt is unsustainable. And recently the conversation is switching towards the debt spiral. But most importantly is that debt needs to be rolled over. And in the next 3 years, that debt is coming due in the US, and the majority of it needs to be rolled over. So do you think 3 years from now that rates are going to be high or low? I imagine that as they're getting ready to roll over that debt, that we're going to be looking at a period where rates are cut really, really low so that they're able to go ahead and roll over this debt as cheaply as possible. And what that's going to do is, so I guess what I'm getting at is over here, all as they could do is be reactive to keep the system going as long as possible at this point. They can't do anything to fix it. They can't do anything to, well, I'm trying to put a hole in my thesis of why I think that's wrong, and I'm having trouble doing it. So let me back up and go, well, let's pretend that they raise rates and they keep them elevated for longer, and that even though Powell said yesterday that the longer they keep rates elevated, the less of a chance for a soft landing. And the Fed is telling us right now is that they're going to raise rates and keep them elevated well into 2023. So Powell's telling us that sets up a hard landing, which means things are breaking and they have to come back towards balance sheet expansion. So that doesn't really work out. What happens if they don't keep rates high? What happens if they finish raising rates and move towards a pause sooner than expected, even though we don't want to fight the Fed and they told us that's not going to happen? And then what happens if they are able to start after pausing, lowering rates, and then magically a soft landing is what occurs, right? And then what happens is does that extend this out further without them having to go to balance sheet expansion a lot quicker? Yep, that would do it. I don't really foresee that happening, but that would do it. I don't know. Or more likely than not is that instead of this thing going out for the next 8 years, that actually they are ever able to actually jump towards the digital dollar and some type of new system, which is bypassing the banks. And because of the way that they engineer the money, they're able to, make you spend money before it disappears in your account. So, they're able to kind of to engineer the economy in a different way, and that could extend the Ponzi out like much further than we're expecting. I imagine that's what they're trying to do, and I don't know. That really all went nowhere, right? Because at the end of the day, the reason I have my base case of what I think is happening is because it's just that's what's been thought out, right? So it's hard to come up with a different one, and I assume it could be wrong, but I guess the only way I assume it could be wrong would be that if they were to change the system. If at any point in time we were to see not a new Bretton Woods taking place that's taking place right now, without people sitting down together around the world and the powers that be talking about how they wish to structure it, but one that's happening with a war in the Ukraine, one that potentially is going to happen with a war over Taiwan, and one that's happening with a financial warfare being fought that's taking place over time. That is going to lead towards monetary reset is happening, but it's not going to be quick. If we were to see people sit down together and form the next monetary system, then obviously that's something that would happen a lot quicker. I don't know. Yeah, I can't. That's a great point. I don't think it ever has either, right? And most of the time, it does involve war. It does involve war. I saw today. It's not nice to talk about these things, right? So this is what the Fed is telling us is going to happen, that they're going to be raising rates and keep them raised for longer. Which also, do you think this? You can't fight the Fed. Do you think this is going to happen? Do you think that the Fed is going to continue to raise rates throughout of all 2023, finding the neutral rate somewhere around between 4.5% and 5%, and then slowly over 2 years lower them down? There's no way that's going to happen. Anyway, there's no way it's going to happen. But this is not nice to talk about. But we're seeing that the Serbian president warning of a great world conflict within 2 months, and you can read why he's saying that. And I don't think that's alarmist or anything like that. I think that is sincerely what he's saying, and he's talking about the UN's has been weakened, in that area of influence. And if you remember, it wasn't too long ago. It was only in the 90s that we had the great conflict over there, right? We had the war over in Bosnia and Serbia, And under Bill Clinton, they went in there and they were able to, the UN was able to, work it out. But now we're seeing the world stage changing very drastically once again. And we are seeing right now, it appears that, that let's call it Soviet era influence looking to have more of a role in these I wanted to say territories, but these vessel states, I guess you should say, that they once had. And I don't know. I don't know how we got here today. What's my downside Bitcoin prediction? I don't have any predictions, like for real. I'm just trading what's happening, right? So I did say, and right or wrong, it might be wrong. I did say, whether it was October, November, September, that if we didn't have a blow off top in Bitcoin in the fourth quarter of 2021, or I said maybe even if that took place in January 2022, at that point I would no longer follow 4-year cycle behavior. And I think it was very smart to do. And I said I would just lean into my TA going forward. I think that was very smart to do, but taking it a lot further than just my TA, we went into my system design, right? And then CTM took that and ran with it. And what we've built is the ability to conquer the markets, right? And so it's really irrelevant what it doesn't matter. Like, and that's the whole thing. Like when we do our macro analysis, it doesn't even matter. It doesn't help us in our trading whatsoever, but it's fun. It's a passion. We like to do it, right? TA doesn't even matter. TA is for beginners, seriously. But so I don't have any type of like what type of downside target could happen. I mean, I think what happened in April of 2020 and the forward, I'm sorry, May 2020, and the forward contract June of oil traded negative, right? You saw WTI crude oil trade down to zero. I mean, it's the markets. Anything could happen. Like Bitcoin if I say Bitcoin could go to zero, people they get all triggered. Like, my stop loss is zero. It's in cold storage. It has multi-sig across different geographical locations. It's Glacier protocol. Like, I can't access it. It's not being accessed. My stop loss is zero. How far, like, where do I think Bitcoin can go? What's my downside target? Zero. What happens if they decide that they want to go ahead and they want to 9/11 the internet? And there's going to be some type of internet going offline by these bad actors. And now you need your ID and biometrics to access the internet things could go bad for a while. And I don't know what happens to the price of Bitcoin throughout all of that. I mean, look, whether you think that's a conspiracy theory, fine. But if you haven't thought through that, then you have a lot more work to do, honestly, because that all could happen. It could all happen. And we just don't know. Hope for the best and prepare for the worst. And unfortunately, that most people don't take that type of stuff seriously until it happens. And after it happens, it's usually too late. And at that point, then people are going to be really, concerned. But I don't know what downside targets are big for Bitcoin. I don't know if the markets are so complicated. These are unprecedented times. And while 12 hours ago or 10 hours ago, people would have told you within the next 24 hours, the June low was going to be taken out in crypto. There was a strong probability of that happening. And now today, maybe a little less, but maybe that little bit less only has to do with the Bank of Japan shooting off their ammunition, which is not going to last too long. And then we could see over the next 1 to 3 weeks that June low taken out, and then Bitcoin could easily, and everyone knows, dump towards, it could end up realistically easily between $10,000 and $14,000. I don't think that would surprise anyone. There are people who talk about 3K, and they talk about 3K because of what happened to the NASDAQ during the dot-com bubble bust, and that might happen, and then they'll be like, oh, see, like I had a crystal ball and I knew what was going to happen, but really, that reminds me of what happened in 2018 when people were talking about the exact same thing, only they called it the hyperwave, and everyone said that Bitcoin with certainty was going down to $1,500. It never happened, and it was the exact same analysis coming off of what happened to the NASDAQ as well as all these other assets over 100 years, and nobody knows what's going to happen, right? And I can't imagine Bitcoin going down that low. I literally cannot imagine it. I can't imagine it, and I've talked about it because of I forget the numbers. Bank of America, when Bitcoin was trading at $50,000, said it took $93 million to move the price of Bitcoin 1%. Right? So I'll say $100 million, even though it was $93 million at $50,000. So that means if instead of $50,000 Bitcoin, I have $5,000 Bitcoin, right? Am I doing my math there? That means it only takes $100 million to move Bitcoin 10%. So you're telling me it would take $1 billion to move Bitcoin 100%. I mean, there is a lot of money on the sidelines. There is a lot of people, and I'm not talking about retail. If I talk about retail, there's a lot of money on the sidelines. There's a lot of money salivating for lower Bitcoin. There's a lot of hardcore Bitcoiners out there who dream about 10K Bitcoin, and if Bitcoin drops to 10K or below, are going to be on the bid. They're not waiting for 3K. They're really going to be scooping that up. And then forget about retail. And everyone I know that has a 3K target on Bitcoin, they're like, I believe in Bitcoin long term, and I missed it. They're new to the space within the last 2 years, and they dream about it, and they're hoping they get the opportunity to pick it up at 3K, and they might. But there's also a lot of funds out there who really understand the financial system. They do understand Bitcoin. They're interested in it, and they have a lot of money. So I can't imagine it's possible for Bitcoin to go, even if it were to get below 10K, much below it. But between me and you, anything is possible. And, again, we saw oil. This is oil, crude oil, the backbone of the world, trade to zero, and then the forward contract negative. So anything could happen. Thanks for smashing light. Thanks for spending the time here together on this journey. And it's a journey. It's a journey, and each day is new and different. And some days are like explosive and like full of energy and fun, and like we're just like on the right side and making bank, and other times are tough and difficult, and it seems like a lot of effort and a lot of work. And then other times are like today. I don't even know how you would describe today. We're off on like tangent land. But that's how it all happens. That's how the education happens. Ooh. Yeah, Juan. And by the way, like, right, you could look at like CTM GBT style, and waiting for the green birds. And there was one trade in 2022 back in April, right? This is on GBTC, traded off the daily time frame. Like, who's holding GBTC right now, and who's holding it in a retirement account? And you've been holding it. Like, the value of what we do is intense and immense. And knowing what side of the market to be on, and when, and when to be out of the market is absolutely priceless, right? By the way, I mean, talk about getting out at the top and then like 4 months later, an opportunity. Okay, like in and out, and then just being on the sidelines waiting for those green birds to fly off again. And when they do, having the capital preserved to be able there to make. There's a big difference between holding down from $50 down to 11, because the amount of return you're going to need to make to recover is absolutely extraordinary. If price was off 50%, you need 100% return just to get back to break even. But once it goes off more than 50%, those numbers keep climbing and climbing drastically. There's a lot difference between conserving that buying power and then waiting for the right time to enter them. And maybe that right time gets you right back out, right? Good, big deal. I'd rather take a small loss and then rather ride this down. And that right there is absolutely priceless. And we wait for the green birds to fly again. But here's the thing. It's a much better position to be out on the sidelines waiting for the green bird, because we don't know. We don't know if that's tomorrow. By the way, they almost got ready for the green birds to fly just a week ago. They almost did. It didn't happen, but they were getting very close. And you don't know whether or not that's going to be another 6 months from now, another year. But it's a lot better working out a plan and having a strategy in place and then executing off a strategy than it is just, guessing. And that's the truth of it. That's the truth of it. Thanks, brother. Andreas, appreciate that. So that's today's session. Yesterday's session was absolute fire. I didn't ask you all at the end to smash the like, and I'm not going to ask you to smash the like today. It just wasn't that type of session. That's okay. Tomorrow will be. Or if not, it'll be a Monday or Tuesday. Like, that's the thing. There's no, especially when you're on the right side, all of a sudden it's different. There's absolutely no urgency. You have the clarity. That right there is priceless. I wish that for you. I truly do. And I know from past experience, right? People that spend their time here, who invest their time into, hanging out with someone who's got a bit of experience in the markets, that over time, nuggets are shared all the time, and that the ability to go ahead and to be able to navigate the markets and also to think about not only the markets, but things in a different way, that is infused. And that's what I'm here to do with all of you. Thanks for being here today. Thanks for being here every day. Lots of love to you all. I'll talk to you later.